Hello, chart watchers, and welcome to this Thursday, April 12th Market Watchers live show with your hosts, Tom Bowley and Aaron Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. The market's off to a good start today. We are flirting with some overhead resistance on both the Dow Jones and the S&P 500. You can see the Dow Jones at 24,500. That has been a level that has been difficult to clear in recent sessions, and it also served as support over the past couple of months as well. The S&P 500 basically trying to do the same thing, trying to get through some overhead price resistance, and also now trying to challenge and take out its 20-day moving average, which has been a problem over the past few trading sessions. The NASDAQ having a very strong day on a relative basis, up about 1% and back above that 7,100 level. This would be the first close above 7,100 in the last couple of weeks. Russell 2000, you can see the relative strength that we've been seeing and small caps have been enjoying for the past couple of months, really. You can take a look at these lows, which have held, and you go back to the other indices, and you can see recently we did break to lows that were below those that we saw in mid-February and early March. So the Russell 2000 continues to perform well. 10-year Treasury yield really having a strong day to the upside. That means a lot of money rotating away from bonds. The TNX is up almost 4% today, 2.83%. Volatility continues to decline, looking to close at its lowest level in about 3 to 4 weeks, currently down 7% to 1885. Financials, industrials, and technology, three of the aggressive groups leading the action today. We like to see that. Just really like to see a strong finish. Among those in the technology space, some big names, Micron having a nice day, NVIDIA up challenging its moving averages, and Intel not too far from a breakout to a new high. And with that, let me bring in my co-host, Aaron. How are you doing this morning, Aaron?
I'm doing just great. How are you?
I am good. I know you're getting a little nervous. It has nothing to do with the market.
No, it does not. Tonight, the Ducks play their first game one in the first series of the Stanley Cup playoffs. So, pretty excited. I think we're going to kick some butt at home tonight and on Friday night. I'm Saturday night. Thursday and Saturday night are at home. So, I'm very excited. We're going to make sushi of the Sharks.
Okay, so you have a home game tonight?
I do.
Okay, so the Ducks have home ice advantage in this series?
Yes, we actually managed to pull that out and get into second place in the division in the last game, all the last games.
Okay.
So we won out, and the Sharks did not. So we ended up leapfrogging them, which took away their home ice advantage and gave it to us. So I'm pretty excited. We're on the way up. We've been on some great momentum, and the Sharks have not. Got good news last night. The LA Kings lost. That's always great because my favorite teams are the Ducks and whoever plays the Kings. So right now I'm a big Vegas Knights fan.
Actually, I watched the first 5 minutes of that game, and I saw the Vegas score the first goal, and then I turned it off, and I was just tired, went to bed. But
no change after that. So
I got up this morning. I saw the whole game. It was 1-0 final.
Exactly.
I saved myself some time. Well, of course, the Caps play tonight, and last night Pittsburgh got their playoff season, off to a
good start. Yeah,
they won 7-0, so they're probably just licking their chops, looking ahead, realizing that they get the Caps in the next round if both teams win their first rounds. But
exactly.
I'm not even getting into that. I'm trying to stay in a good mood with the market the way it is today, so I'm not going to talk Caps playoff.
No problem.
Yeah, but we do have, some more good information for everybody today, and I'm going to let you take it away with the schedule and the agenda.
Absolutely. Right now, for this week, we are going to show you that tomorrow I have a workshop, and I'm going to do it on divergences and confirmations. So you'll want to come for that. On Tuesday of next week, we have everything stock charts. I'm not sure who's coming in for that just yet, but we will announce it on Monday. Tim Ord from the Ord Oracle is going to be our guest on Wednesday. He writes in our Top Advisors Corner. So you may want to go check out some of his writings before he comes on the show Wednesday. And with that, let's get into today's agenda. We're going to do a segment on tools and features. So these are things that we use or information we think you should know. So we're going to go through that. We have a scooter report after that, followed by the ever popular 10 and 10 to 1. Our first symbol is going to be at home group, and the symbol is home. Pretty easy to remember. And finally, we're going to finish off with everybody's favorite anatomy of a trade. So with that, Tom, I'm going to hand it back to you for some technical headlines and news, and I'll meet you later on the other side.
Sounds good. We did have a economic report out this morning. Every Thursday, we get the initial jobless claims, and that came out a little bit higher than expected. And you can see the 10-year Treasury yield kind of shrugging it off as we have now moved up more than 4 basis points today. This is one of the biggest moves to the upside we've seen in a while on the 10-year Treasury yield. But the initial jobless claims came in at 233,000. The market was expecting 230,000. So the claims was a little bit higher than expected. But as I said, doesn't look like the bond market cares. It's shrugging it off. Everyone's selling bonds today. That is sending the yields higher. And of course, anytime you see the yields moving up, that tends to be a good sign for stocks. In the short term, anytime the yield moves up, it means money's coming out of the bond market, and that money many times moves and finds its way into the stock market. And today is a perfect example with the yield jumping to the upside. And also we are watching equity prices jump as well. Yesterday, we did see the crude oil price make the breakout that we talked about. This is $ WTIC, light crude oil. And there is the breakout yesterday. We closed back up above that 66.25 area. It was the first time since December 2014. So I don't know if you've taken a look. I know this morning I saw gas prices had moved higher than I had seen them in quite some time here in South Carolina. But crude oil prices did break out, and as a result, we have seen some pretty good action in the XLE. There is some profit taking going on today from earlier highs, but still the breakout you can see is pretty apparent, and I would expect to see this strength continue. To the downside, you now have very good support on the XLE at 69 in terms of price, and that rising 20-day, which is now crossed over the 50-day. So we do have that golden cross, and the 20-day is down at 68.19. So that from the 20-day up to $69 should provide some really good support on the XLE if we get into any kind of renewed selling for any period of time. I don't know that we'll go all the way back down there at this point, but we shall see. The S&P 500, wrote about this earlier in my blog. This is a 6th straight day now. We are trying to get through this 20-day moving average. We have gone up and tested it, or almost tested it, the last 5 days. This marks day number 6. We opened beneath it, but you can see it's been pretty strong since. We are trying to close above it, and we're seeing a lot of this similar action in many areas of the market. For instance, the financials, which is the best performing sector today, trying to get through its 20-day moving average after multiple tests recently. We can go right down the line within the financials. I think if we take a look at the banks, you will see the banks doing the same thing, trying to get through their 20-day moving average. I think if we take a look at investment services, DJUSSB, trying to get through that 20-day moving average. So this is a pretty significant technical development if we can hold. Now, we've been through the 20-day on multiple occasions recently across many sectors and indices, but we've really struggled to hold it. So I think the close today will be important, but I kind of get the feeling that we're starting to see a lot of momentum shift back here to the upside. The relative strength that we've seen in the small caps, I think, is a positive. The recent breakouts that we're seeing here across the 20-day moving averages, I think are a good sign. And so we'll see whether or not this continues. We also have some solid earnings reports out earlier today, or we had some. Blackrock, this is in the asset managers group, I believe, or it might be investment services. Let's take a look at that real quick. But we are trying to get through our moving averages there. This is a nice uptrend, though, on Blackrock. Yeah, it is the asset managers group, which had been holding right at about a price support level just above 215. We went down actually maybe just a tad below it to 215, but that's starting to turn back to the upside. You can see that Blackrock, relative to the asset managers, has been a very strong performer. Relative to the S&P, also a very strong performer. And then asset managers have taken it on the chin a little bit here over the past couple of months with the interest rates declining or consolidating. But I think that could change, especially if we see the 10-year Treasury yield, which is rising today. If it continues to rise, that would be pretty significant here. But all in all, I think BlackRock has been a great performer. They did come out with the earnings today. They reported revenues of $3.58 billion. Market was only looking for $3.28 billion, so a pretty nice beat on the top line. Bottom line, $6.70. Market expecting $6.41, so a nice beat both on the top and bottom lines. You got a nice relative performer. Can we clear the 540 area? I think that would be a really bullish development for the stock and for this group if it can. A couple of banks that came out. Now, these are smaller banks. We're going to get some big ones out tomorrow. But Bank of the Ozarks reported they beat top line, $246.5 million versus $246.1 million. They beat on the bottom line, 88 versus 85 cents, and trying to get through the 20-day moving average. This definitely is the theme right now in the market, is can we recapture those 20-day moving averages? The more stocks, the more industry groups, the more sectors that move above the 20-day moving average, the more of those stocks and sectors and so forth that will be on a buy signal. So really important from a technical perspective to get back up above those levels. Another bank out, Commerce Bank shares. This one, the chart and the earnings report, both very, very strong. You can see we're trying to make a breakout today on CBSH. Failure to do so could lead to a little bit of pullback, but I think on a relative basis, this chart's really been, or this company's really been performing well. The chart's very strong. They did report revenues $312.6 million. Market expecting $310.6 million. 92 cents in earnings. Market only expecting 80 cents. So a really big beat for a bank. Finally, Delta Airlines came out with earnings this morning. They also beat on the top line. They beat on the bottom line, but just kind of a muted reaction. We are up 2.4% today, but still mired in this downtrend, trying to hang on to price support, which was established in the second week of February, down around 50 on pretty heavy volume. So for now, I would say watch the trend line resistance and these moving averages to the upside on Delta, and to the downside, I think $50 support is strong. Now, also one thing that happened yesterday, which I thought was very important as we go forward, gold. Gold, you can see, tried to make a big breakout yesterday and failed. It was at a multi-month high. And if we go back and we look at a weekly chart here, you will see that this is challenging some very significant highs, all the way dating back into 2016 at $13.75 per ounce. And so closed yesterday at $13.60. But I want to show you the GLD. Gold doesn't update. Actually, I'll go back to the dollar sign gold so that you can see the daily chart here. But the problem is gold doesn't update for the current day's action. So to see what gold's doing today, you have to go with the GLD. And you can see, look at that reversal with a false breakout and then the move to the downside. This top in gold could coincide. I'm not saying it's going to, but it certainly could coincide with the dollar bottoming. And the dollar bottoming, of course, we've been talking about that. Aaron and I have both been talking about our expectations for the dollar to move higher. We do have this double top that if we could break through would be very, very bullish. And of course, I have spoken on multiple occasions about the 10-year Treasury yield versus Germany moving higher. With the 10-year Treasury yield starting to jump again today, we could see a breakout here on a relative basis. And what we normally see is the U.S. dollar following suit. If our rates are going up faster in the U.S. than they are at other parts of the world, that strengthens the dollar. But occasionally we get into these negative divergences where we see U.S. rates moving higher, faster than other parts of the world, and the dollar declining, but that normally doesn't last long. And the last two times when we've had this, we have rallied strongly with the dollar coming out of these periods. And the dollar index is at a major trend line support and price support level, coming in just at about the 88 level. So the dollar, everything I'm looking at in the market is pointing to a strengthening dollar, except the dollar itself, which has not yet been able to strengthen. But I do expect that we will see that soon. A couple of industry groups worth mentioning here. You've got the semiconductors having a really nice day today, trying to get back through their moving averages. I pointed out earlier, NVIDIA, Micron, Intel, all having strong days. They're part of the semiconductor group. And it looks to me like both trend line and recent price resistance and also moving average resistance, all three could be taken out today if we see continuing strength on semiconductors into the close. So this is going to be worth watching. Another key area that was leading in the industrial area, commercial vehicles and trucks. Once again, we've got an area trying to get back through the 20-day moving average. You can see the PPO starting to rise, maybe a slight positive divergence on that last low, and a lot of failed attempts to get back through about 2040 to 2050, and today's high was 2040. So still some obstacles, technical obstacles ahead this afternoon. But if we finish strong today and we get strong reports from the banks tomorrow morning, we got some big ones coming up. We've got JP Morgan. I think I had mentioned Bank of America. That was an error. They actually report on Monday. JP Morgan, Citigroup, Wells Fargo, and PNC all report earnings tomorrow morning before the bell. I expect, and again, if we go back and we look at the 10-year Treasury yield, one of the things that drives bank earnings, and I audited banks, so I'm very familiar with the fundamentals. One of the things that really drives bank earnings is the direction of interest rates. And as you can see in the fourth quarter of 2017, I'm going to go back just a little bit further so we can see this. In the fourth quarter, interest rates, the 10-year Treasury yield was mostly flat throughout the quarter and was in the 235 to 245 area most of the time. Here in the first quarter, check out what happened to the 10-year Treasury yield throughout the first 2 months. Now, yes, we've been consolidating and pulling back. We are having a pretty good day today. But overall, the Treasury yields are much higher in quarter one than they were in quarter four. And I think that's going to translate into solid earnings reports from the banks. Now, of course, we all know it's not just about what you're reporting in the prior quarter, but it's what you see going forward. So I think their guidance going forward is going to be really important. But I did find it very comforting to see CBSH, which reported solid results, immediately spike to test their high that they saw back earlier in March, about a month ago. So a lot going on, a lot coming up. One final comment, and this is why relative strength, in my opinion, is so important. BBBY, which is Bed Bath & Beyond, check out the big drop today. Now, you might look and say, well, you know, it was just kind of going sideways. I'm going to show you my relative chart here in a minute. This is a company that lowered their 2019 guidance. And as a result, stock down 19% today. But if you were somebody who followed relative strength, you wouldn't have touched this stock. Because again, if we look at that relative chart, you will see that we had been downtrending. We're actually in a longer term bear flag. Downtrend followed by sideways consolidation. You expect a breakdown. And that's what we got this morning with big volume. Check out the specialty retailers here and how strong the group has been. And then look at Bed Bath & Beyond relative to the group. This is why you don't want to take part in stocks that are not keeping up with their peers. Also, look at what Best Buy has been doing relative to the S&P 500. It's been horrible. And yet their industry group has been one of the stronger groups. So Best Buy, literally the charts have been telling us that there's not great news for the company. And today we get the guidance that they're lowering 2019 bottom line. So anyhow, wanted to point that out. And with that, let's switch over. We're going to take a look at some tools and features for you today here at Stock Charts, and I'm going to let Erin get started with that.
Excellent. So, you know, we get those survey responses all the time, and we appreciate them. And a lot of the questions that we get are about the show as far as finding archives, where our chart lists are, how can I get to the weekly schedule? In addition, you know, Tom he just showed it, that relative chart style. And I want to show you how you can get to that as well as others and how you can steal them for your own. So let me go ahead and I'm going to get started here. So I'm going to start with the Market Watchers Live blog. And of course, if you want a blog, where do you go? The blogs page. So I'm going to take you up here. So here's our member dashboard. I'm going to go to our blog articles. That's where you're going to find the Market Watchers Live blog. And here we go. So if you're a regular watcher of the show and you haven't been to the Market Watchers Live blog, you're missing out. So that's why I really wanted to show everybody, because there's so many important links in there. But the first one I wanted to show you is our Market Watchers Live chart list. So remember, all I did was go to all Stock Charts blogs, clicked on Market Watchers Live. So the Market Watchers Live chart list is basically those 10 and 10 charts with all the annotations that Tom does on them, as well as you can see, some of his charts have that relative ratio set up right there on them. So you can get to all of the charts in that chart list for the past, I think, 3 days worth of 10 and 10 charts, and you'll find them in the Market Watchers Live blog. So, live chart list from the Market Watchers Live blog. So let's go back to the blogs page. I'll just keep moving that way from the beginning. That way it'll be easier for you to remember. So that's where the chart list is. Of course, we have our latest posts here. A lot of people don't realize you can get to our archives simply by clicking that list. So if you know the show, let's say you remember that Mark Chaikin was on in January, or however you want to do it, then you can go in and just get all of the January readings right there. So one of the important things, though, about the Market Watchers blog, I'm going to show you our last one that I did yesterday. So in the Market Watchers Live blog, yes, the top always looks the same. It's a basic template, but it makes it easier for you to get to what you want and see what you want there. So the first thing up is, like I said, I have links to our stock charts channel right there. There's the Market Watchers Live chart list. So just in the blog itself, every single one of the blog entries, you're going to find the Market Watchers Live chart list and the links to the Stock Charts TV or to our Stock Charts YouTube channel. You have all the information about our Twitter. You can see what our email address is if you want to send us email, Facebook page. But as you can see at the beginning of all of them, I put what the current weekly schedule is. So it's the chart basically that you see at the very beginning of the program when I go over what's coming up. So anytime you go into the most recent Market Watchers Live blog, you're going to have that weekly schedule right there. And oh yes, here's a link to the Stock Charts TV playoff bracket challenge. If anybody is interested in going and joining into that, I think it's pretty thin right now. Could use a few more players. And then I go through the agenda. So you have that, and the basic times as to when we were going to start them. Of course, you see that when you watch the show. So what I do, though, for each segment is I give you a timestamp. So if you go to the Stock Charts archive and you turn on this show and you want to maybe skip through the technical headlines and news because they're not, as useful now, because maybe you're watching it the next day, this is how you can know where to forward to get right to the segment you really want to watch. And if you're not sure if you want to watch a segment, you can go through the summary chart or charts that are below it. Now, in the case of Carl, he was there. He actually sent me his chart list. So all of these charts you can click on and get to on your own board here. So you can click to get a live version. You can click and you'll get to see what's here, of course. But if you get the live version, you can see all the annotations are still there. And this is the important thing. Go down and look at how these charts are set up. If you like them, set your styles that way. But maybe, one of the quick ways to do this. So if you like Carl's monthly chart and how he has that set up with the PMO, the weekly PMO, we can go down here. And as far as chart styles, you can now add a new one. So I'm going to say Carl's monthly. And then let's say I want to have the button on the side. That would be very useful. So I'm going to make it like the last button. So we'll add that. All right, so now I have this chart style. I can now call up, let's say, UUP. And you can see it's in that chart style. And then I set that button, remember, to number 9. Here are your buttons, and boom, there's Carl. That's the one I have. So if you want a Market Watchers intraday, there you go. But anyway, I wanted to point out that in particular, as far as the blogs, so just going to move back. So I have all of the guest charts if I am able to get them from the guest. And if I'm not, I will still at least cut and paste some of those charts in here, so they may not be linkable per se. Now, a lot of people asked about the P&E chart yesterday that Carl presented. Again, you want this for yours, click on it, take the live version. All right, and there it is, exactly how you want it. It tells you all the ways and what the symbols are that he used to create it. But in a very simple way, you can just save it. So I'm just going to save it to, let's just put it in a watch list. And now I have it. It's all mine. I get to keep it. It has all of the information I want on it. Now, if you wanted to keep the annotations that Carl had, I'll show you how you can do that too. So let's go back. And here it is, right? We wanted it with the annotations. The way to save the annotations is you go to annotate it yourself. And if you add just even a little something to it, then you get the opportunity to save it. And that'll save all of those. It'll save all of those annotations for you. So now I have it in my watch list. I have the annotations included. So I think that's pretty important subject. So I go through all of these charts that he had put in here, that Carl put in. And then there's our 10 and 10 before 1. You can see we obviously didn't get it started at 10 before 1. But again, that's helpful to you. And then you get to see what symbols we covered. And again, you can go in and fast forward to that timestamp if you want to watch those particular symbols and fast forward. But it gives you a way. Our time is all very precious, every one of us. And so this can really save you a lot of time, especially for those of you who have to really watch the recordings because you're not available to watch these live programs. So we get that stock charts channel updated on YouTube, typically by the end of the day. So you'll be able to get to that and use these timestamps. A lot of people wanted these graphics that I showed on the show. So I included those as well. And if you want to save them, you can drag them to your desktop or however you want to do that, cut and paste. And the very bottom of every one of these is what's going to happen tomorrow and the Market Watchers live links. Everybody is asking every single Monday, and I'm not joking, this is not an exaggeration, every Monday or anytime I show my scans, everybody, hey, where can I get your scan? Here's where you can get it. At the bottom of every single Market Watchers Live blog entry is a link. But there's also a link to Tom's blog, to my blog. It's a link to the PMO because a lot of people ask about that. How does that work? And so you can just click there. It's going to take you right into the Chart School article. And there you go. And there's my PMO scan. It takes me right there. So you can copy and paste it. So that's all I was going to show for my tips and tricks. Tom, what did you have to show us?
Okay, well, first I thought what I would do is just show everybody how you can get to some of the predefined scans. So let me get real quick. And at the bottom, from the members dashboard, if you go down to the bottom under your scans, you have, obviously you can do your own scans, but there are predefined scans here at Stock Charts. And if you click on this, it will take you to a predefined scans page. And you'll see that there are obviously a ton of various predefined scans. I'm a huge candlestick fan. So you could, if you're looking for bullish reversing patterns, maybe stocks that have been strong in the past, but they were in downtrends and you're waiting for a bullish reversal, you might find some of those in here. Bearish reversal patterns if you tend to be more on the bearish side. You have your continuation patterns. You have single candle patterns like the hammer, which I find very useful at times. Also, shooting star. I did a workshop a few weeks ago talking about reasons to sell, and sometimes you get these candlesticks that will give you reasons to sell, and shooting star is one of them. Filled black candles would be another. So you want to be careful sometimes when your stocks are printing these types of candles. But if you're looking, say, for instance, to short, you might find with a shooting star, which is kind of like an upside down hammer, you may have breakouts with the tails going up above resistance and then coming back down and closing below resistance. We've looked at that many times. This is a predefined scan where you could literally go in here And maybe you want to look at the lowest scooters that are on here that are printing these kinds of bearish um, candlesticks. So let's just pull up Chicago Bridge and Iron. I mean, there you go. This is a possibility of a failed breakout at the 20-day moving average. And you also can see the most recent low over here was taken out on very heavy volume, and we're failing after going up and testing that resistance level. Now, I'm not saying I would go out and short Chicago Bridge and Iron because I'm not a big fan of shorting in what I still believe is a bull market. But for those of you who do have more of a shorting strategy, this is how you could use the predefined scans. I mean, literally, all I did went in, pulled up one chart out of there with a fairly low scooter, which tells us that it's not a great performing stock. And it's also printing a shooting star candle, and that potentially could be a short candidate. We look at another one, very similar, McDermott, trying to break above the 20-day moving average. Currently, though, may actually close back below the 20 with this long tail above it, off of a downtrend and off of the PPO falling. I would expect failure at the 20-day, and we're getting a potentially a bearish candle forming right at the 20-day. So, those are some of the things you could do using the candlesticks. I thought what I would do today, because the market is bullish, but we haven't broken out on the market, so you'd have to think that stocks that are breaking out the new 52-week highs would be something that you should consider, because on a relative basis, these are going to be some of the strongest stocks. The market's not breaking out. The market's nowhere near breaking out, yet there are 144 stocks that are breaking out, actually 145 stocks now that are breaking out to new 52-week highs. Now, a couple of ways to look at this. I know just from my own history and studying the market that gambling stocks tend to do very well in April. So one thing you can do in the search table of the predefined new 52-week highs is type in gambling. And when you type that in, if any stocks have gambling in their name, or if the industry group is gambling, they're going to come up. And in this case, you can see Melco Resorts and Entertainment. Now I pull this up and look at this nice breakout. Very heavy volume coming in. It's been consolidating, really has struggled at 29.5, 30 for the past, maybe last 4 or 5 months. And now we're getting a candle. Now, if we leave the long tail and we go back down and close at 29.5, I'm not going to be nearly excited. But if I was somebody who likes to play breakouts, this to me is a great looking stock. PPO is pointing straight up, looks awesome. Heavy volume is confirming the breakout. Again, just by knowing these tools and features are here at Stock Charts, that's how quickly you can just stumble upon a chart that looks really good. Now, in addition to gambling stocks, you can look at, say, semiconductors. So let's pull up semiconductors. We already talked about them earlier and the fact that they're having a really nice day. Well, if you look at these charts, there happen to be 3 semiconductors that you could take a look at. First being Mellanox. Mellanox had consolidated for quite a while as we opened 2018. We did get a nice volume gap up, broke out, came back down, held the 20-day moving average, and since then we have been continuing to move up. Volume today, already 428,000 shares. And again, I think if you look back, you'll see that's a pretty good volume day already, and we're not even to the halfway point of the day. So we're getting another move to the upside on Mellanox with increasing volume. Again, this is a stock, if I pull up my relative chart that I like to use, you're going to see a great performer here. You're in a group that has been rising. It does have pullbacks, but it looks like maybe the trend line is breaking back to the upside. And here is a stock, Mellanox, that's outperforming its peers, outperforming the S&P 500, and you've got a group that as recently as 2 weeks ago was setting a new high relative to the S&P 500. So you got a strong group, a strong stock within that group, and it all came from looking at the 52-week highs. And it all makes sense because from looking at the market, if we pull up the S&P 500, we're nowhere near a 52-week high. I mean, the high was set back in January, and here we are. So I think these are ways that you can find outperforming stocks without having to come up with some fancy scan of your own. They're right here and available in the predefined scans at Stock Charts. There were a couple of others, though. So let's go back to that semiconductor. There we go. Semtech. This is a nice looking chart. And check out, I'm going to pull up the weekly chart. I looked at the weekly chart earlier. Look at this sideways consolidation really for a year. And here we go, where this is the week we're finally getting the breakout. Look at the weekly PPO picking up, and look at the volume supporting this move to the upside. Semtech, I think, looks very interesting. And then finally, XCRA. And with XCRA, this one makes me a little bit more nervous. I think the other ones look really strong. And, this one hasn't even come back to test its 20-day moving average, so maybe it just keeps going. The thing that makes me a little nervous is that off of this move and pullback, as we've broken out, you can see that the PPO is much, much lower. The volume, while it's been okay the last couple of days, clearly much lower than we saw at the end of February and into early March. So this one is just maybe looking like it's gone a little bit too far, too fast. I mean, this is a company that went, in a 40, 50 cent range for months, and now all of a sudden has tacked on more than 20% in a month. So anyway, XCRA, again, it points us to a really nice stock. It's breaking out to a 52-week high, but this one maybe doesn't look as good, at least to me, as the others. I think there's a lot of risk involved, a lot more risk involved with XCRA. And that was essentially what I wanted to show. I mean, again, you go through those predefined scans, and there's a lot of different things. If you like the MACD crossovers, you got the bullish MACD crossovers. You can then sort this by scooters, so you can get take a look at maybe some of the best performers and how they're doing, and whether or not. I mean, here's the solar ETF. We pull that up. It's got a scooter ranking of 95, and what it's doing is it's telling you when. This maybe isn't a great example because we're right here at the center line, but it's not. These aren't center line crossovers. These are trigger line crossovers. This is where the MACD goes above its own trigger line, which is its 9-day moving average. And it goes from underneath to above. That's why it's bullish. If you wanted to bearish, then you'd be looking for the opposite. MACDs that were above their trigger line crossing beneath. CME, this is in the financial services area. And you can see this one looks like maybe it's starting to put in a cup. There is your bullish crossover, the MACD above its trigger line. And you can see the price action pretty strong. And this is a group in the financial space that should do well if rates continue to rise. And so with that, why don't we take a quick look, summary of the tools and features, what Aaron went over and what I went over. And next we will get into the scooter report.
Indeed, scooter report time.
Oh,
go ahead.
No, I was just going to say, always fun to get into the scooters.
Oh, I know. So it's for those of you who are kind of new to the program, scooter, we always talk about these scooters, and I know people are like, what is scooter? That is the stock charts technical rank. And if you go into the into chart school, or if you use this to look up scooter, SCTR, it'll take you to articles and also our support documentation to tell you more about how we calculate the scooter. But it's an excellent tool, and John Murphy came up with, I think, the majority of it. If I think I'm right about that, Tom. But
yes,
he created it. So this is an indicator that you might want to be looking at. It gives you some great relative strength among different universes, as Bill Shelby, I think, calls them. So what we like to do is see which are moving the fastest to give us an idea of, okay, we're getting some big momentum here. Is this something we want to keep on a watch list? And then we also show you the big movers in the wrong direction. So I'm going to just show you how you can get that on here. So you've got your tiles, and of course you can set them to whatever you want. I usually have a tile or two open to the DP signal tables, but scooters are right here. They're just one of those choices. The top 10 are the ones that currently have the highest ranking, and the low 10 obviously are at the bottom of the list as far as large caps go. So right now I'm seeing Bed Bath & Beyond, and I know there's been some discussion about that. It's also at the top of this list. I'm just going to bring that one up very quickly here. And we can see why it's on that list. I checked some news on it, and I guess they had a not so great report. And now there's discussion about Amazon getting into their space. We always know that's really a death knell, I think, for so many stocks when it's rumored that they're going to be either acquired or competitors with Amazon. They're very hard to obviously compete with. So, we were in this pattern, this trading channel here, and then of course we got the big gap down and the big drop below this support level. So obviously no question as to why it showed up on the scooter losers is what I would call them. So that's not super helpful at this point, but it does tell you who's having the worst days right now. And again, you can hover over these symbols and you'll get the little mini chart and you can decide if you want to look at it. Like, for example, I don't like to see a stock losing a lot of momentum with the scooter, but I am hovering over this particular symbol and it looks like we're still in a trading range here. And so now with that low scooter, maybe it brought us down to the bottom of that range. And indeed it did. The support level on the 50-day EMA, you can see that coincides with the previous top back in February. It coincides with the top of this like reverse flag I can sort of see here. So that's a very important support level and it's already down near it. So this gives you kind of an opportunity to maybe go in, put it on a watch list, maybe get in and set a tight stop. Particularly with this stock, I wouldn't be doing that. I'll just be honest with you because I don't like the way the PMO is set up. The PMO is suggesting that we have more downside. And there's that move on the scooter as it's brought it down from the 90s into the 60s at this point. So, this, you can bottom feed from over there, but that was one that I thought looked interesting as far as our top down. But we really want to pay attention to the big movers going in the right direction. So I'm just going to pull up a quick candle glance. And we can see in the past 2 days what kind of action we've gotten. I'm going to go to where I have a better candle glance for you. And then I'm going to pass it back to Tom. Okay. All right, so I'm going to go again to the scooters, top up, and I want to look at candle glance, but I want to use my decision point candle glance. It's going to give me more information. So the best part of it is showing me the PMO. Look at this. So we've got a scooter that's on the move, and I just got a PMO buy signal. And it's in the financial space, which I think, as Tom noted earlier in the program, is starting to improve. So now I've got a really good hit. I've got one that's heading very quickly with the scooter rank up. Scooter rank is, gives you sort of a relative strength reading, internal strength reading, in my opinion, more so in the intermediate term to long term. So you want to see these scooters moving. That's telling you there's some internal strength. Got the buy signal. And now, the scoop, that rounded bottom, we're getting a breakout back above the 200-day EMA. So Citigroup actually looks pretty interesting to me. And with that, I'm going to pass it back to you, Tom. I know you were going to look, I think you were going to look at the scooter report itself, but I could be wrong.
Yeah, I'm going to start with that scooter report. I do want to mention, though, when you talk about Amazon and, getting into some of their getting into other companies' business lines and so forth, you think about the 800-pound gorilla. But with Amazon, when they reached their high over $1,600 a share, they weren't just an 800-pound gorilla. They were almost an $800 billion market cap company. So, this is, you don't want an $800 billion market cap company coming into your line of business. That's just not normally going to be a good thing for you. They've got a lot of marketing power. They got obviously a lot of folks, brand recognition and so forth. And it's just never a good thing when you have somebody like that coming into your line of business. But anyway, what I wanted to do here with the scooters is, and before I even get into the scooters, I just wanted to point out, we've been talking about the energy space and how it has broken out with crude oil prices moving higher. And one of the biggest beneficiaries has been the Oil Equipment and Services Index. And you can see here, we made the big move a couple of days ago when we got the breakout on the XLE. And at that time, I was looking at, this 420, 430 area, clearly 420. But then even, and I think if we went back a little further, I think it was 430. That was a high back in 2017. Yeah, right here. Here's 430. You can see going back even further here around 430. And we had intraday moves in the 420s. So I was looking for 420, 430. And all of a sudden now we're getting this breakout. You can see the volume supporting the move. PPO's broken out to a new high. So you look at this, and I get this question a lot. Okay, Tom, I can't buy the index. What are you supposed to do? And well, one of the things you can do is you can go into the scooters. And so if you find a group that you like, this is how easy it is. You go in here to your member dashboard under the Pro Control Center, look under Reports and Analysis Tools. Here are your scooter reports. You pull this up, and if you type in oil, well, we can do integrated oil. We could do oil and oil equipment and services. We could just start with this. This is going to give us 7 stocks in that oil equipment space. So again, if you're looking at the DJUSOI, I just want to make sure I have the right group. I think I do. Yeah, oil equipment services. So if you like this group and you go into the large cap stocks and you type in oil equipment services, here are the stocks, and you can look at the scooters. You can, if they're not already in order, you can click on the column and you can sort them in order of scooter. Now, as Aaron was just saying, this doesn't say that HP is at a buy point. What it's telling you, though, is that among its peers, large cap peers, it's one of the best performing stocks. So if you like, we talk about getting, buying into relative strength. Well, if you like the industry group because it's making a breakout, it just kind of makes common sense to me that you want to be in a stock that is among the leaders in terms of their scooter rank. So if we pull up H&P, by the way, here you got when the group broke out a couple of days ago, this one was going right along with it, and it's not far from its 52-week high. It needs to clear the late January high around 74. We're really only about 1.5 to 2% below that level at this point. You could keep going though. National Oil Well, NOV, breaking out. Look at this move and the breakout above the prior highs. If you pull up the relative chart that I like to look at, here you've got a stock that is breaking out, going back all the way to May of last year, breaking out to a new high. The group itself, you can see, is not even near where it was back in January. So for this one to be breaking out, clearly your relative strength is going to be moving higher, and that's what's shown here by the NOV:DJUSOI, this relationship. Here you can see, even though you've been in the energy space, which for a while was an underperforming sector, you can still see that over the past couple of months, NOV's been a pretty good performer relative to the S&P 500. And now all of a sudden, the group is starting to strengthen against the S&P 500. So this could be in the early stages of a significant period of outperformance for NOV. So again, it's just a way to use the scooter reports to find stocks within areas of the market that you like. I've done these drill down segments before where you start with just an idea and how you drill down to find an individual stock or an ETF that you're interested in perhaps investing in. But the beauty here is that this is large cap. Let's say that the dollar begins to strengthen and now all of a sudden you like this group, but you really would want to focus on the small caps. Well, we pull up the small caps and there's the oil equipment services in scooter order. Now all of a sudden I can take a look at some of these smaller cap stocks that have scooter ranks, say above 70. They could be improving. You could have one that's 75 or 80 that looks better for a current investment than one that's 99, because the one 99 might be very overbought. But let's just pull up one that's around 90, and you can see off of this move to the upside. Look at this really nice pattern. Sideways consolidation. Look at the false breakdown below the 20 coming back up. Nice volume trends overall and this push to the upside. I think this is an interesting chart. So anyhow, this is just another way to use the scooter to find what you're looking for. Just, make sure you're aware that these tools are out there and that you do use them from time to time, because I think they can really help to improve your trading. So with that, let's go through a quick summary of what we just looked at with the scooter reports.
All right. So yep, I went through those top movers and the candle glance. I specifically looked at Citibank and Bed Bath & Beyond. I'll put that also in there. And there you go, Tom.
Yeah, I had just a quick look. Again, going from an idea or, just a quick thought about the market and what's taking place And I think from a short-term trading perspective, it's really important to find these breakouts. And when you see a breakout, to know how to use the tools here at Stock Charts to be able to identify some trading candidates. And so HP, NOV, and GTLS were just 3 examples of how you can do that.
All righty. And with that, oh my goodness, Tom, it's already time for the 10 and 10.
It is.
And hello, we're starting it on time. Woo woo.
We're the streamers.
Yes. Okay. So let's get to it. I put all of your symbol requests in here, and I'm just going to show you. We have 34 today. So again, only a third of them, less than a third, are going to make it to the list. I wanted to just show you the summary really quick. I know we usually do RRG, but I wanted to do something a little different. And I just put this in summary. I went and did the show hide columns, and I picked out the ones that I really care about. I'll add the scooter in there just for fun. But I want to put them in here this way because I like to try and pick stuff from various sectors. I don't want to concentrate in one area. So usually I'll only pick 1 or 2 from a particular sector, or I'll try to get some of the industry groups involved here. And so I just wanted to show you how you can do that. And of course, if I wanted to do it by scooter, I could use the sort feature up here for the scooter. So then we could just start looking at some with high scooters. So you'll never know which way I'm doing it, which way I'm selecting it. So, you know, if it doesn't get in there, I'm sorry. I am trying to keep track now, though, to make sure we don't get too many duplicates during 1 week. We may duplicate week to week, but I don't want to duplicate during the week. So with that, I'm going to pass it back to you, Tom. First symbol is home, HOME, at home group.
Yep, at home group. A couple of levels I thought was interesting. First, the high that was reached back in January. Of course, that's when the market topped. But notice that very heavy volume came in toward the end of March on the move to the upside. And we have broken out on at home, which is very bullish, considering that the S&P and the NASDAQ and the Dow and the Russell 2000 have yet to make their breakouts and are still considerably below those January highs. So I think on a relative basis, you have a really nice performer here. I think that rising 20-day moving average coming up from underneath should provide excellent support on any pullback given that strong PPO. So I'm bullish home.
All right. I'm now going to look to see what the most popular request was in our chat room. And it appears to be Twitter, TWTR. And that is one that may get repeated day after day. I'm just going strictly by how many likes we see on a symbol, and the number 1 will always make the 10 and 10.
Yep. And Twitter I own, and I'm going to be talking about it in the Anatomy of a Trade shortly. So we got all kinds of things to talk about with Twitter. I love the fact that we had that reversing candle, though, at gap support. And, you know, there was a lot of weakness in the internet stocks, mostly due to Facebook and all the problems that Facebook's been having and the congressional hearings and blah, blah, blah. And so it actually set up some opportunities, I think, in some other areas of the internet space. And Twitter is probably one of the best examples, because in their last quarterly report, you can see the huge gap up, very heavy volume. Stock continued moving up. The stock was up to almost $37 just about a month ago. And as a result of all the weakness in the internet space, especially as a result of what was going on with Facebook, the stock went from 37 down to 27 and then reversed with a piercing candle right at gap support. And that to me was a very strong buy signal, because again, you can manage your risk to the downside. Close below $27. You want to be really careful, especially if the volume picks up. But otherwise, I actually think that Twitter's got a chance to make a pre-earnings run. And the first step is to get back through that 20-day moving average.
All right. Let's see. The next one I have is CME Group. CME is the symbol. Investment Services.
Yeah, I think that was one we just took a look at one of the earlier segments, but you can see here, I think it was when I was showing you the bullish MACD crossovers. There it is, that trigger line. But yeah, I think what we have here is a really nice looking potential cup and handle. So you've got the uptrend. In order to have a continuation pattern, you have to have a prior trend. There is your uptrend. And from there, if you use the parabola here, you can mark the top, come down here, mark the bottom, and right where we are right now, you can kind of see this cup forming, the right side of the cup starting to build. Like to see a little bit more volume come in here on the right side of the cup. but I would look for a pushback up to about 172 to challenge that early March high. Maybe we get a little bit of a handle to form after that, maybe even back down to the rising 20-day moving average. But I think this pattern is very bullish. I look for higher prices.
Okay. Next one I have is EBIO, 11 Biotherapeutics, and obviously it's a biotech.
Okay, EBIO?
EBIO, yes. As a B and as boy.
Yeah, biotechs overall have not been doing well, but this one obviously has been doing extremely well, and the volume has been confirming this push to the upside. So we cleared, and there's a really bearish. We talked about some of the candle patterns. There's your bearish engulfing candle off of an uptrend, and you can see that led to some weakness for a bit. But look at the volume come in on this breakout to the upside. I think you've got great support down at about 128. That's your 20-day moving average, and it's also right about the price area where we broke out. So if we could get a pullback to about 128, now granted, this is a small company, it's a biotech. You have to have the ability and the willingness to take on this kind of risk with a small biotech. But I think the chart looks good. The best reward to risk entry, in my opinion, would be down at about 128, 129.
All right, from the consumer staples sector, Coca-Cola, KO. Is it a knockout?
Well, we're going to find out here in a minute. KO, they'll be reporting their earnings pretty soon as well. They're trying to turn back up, and I think they've got the catalyst to do it at this point. You can see the lower lows right here coming across, and the higher PPO. So you've got a nice positive divergence. Prices moving lower, PPO actually moving back up. We've crossed the 50. The 20 has so far been holding. To me, it would be a really negative, a short-term negative, if we were to fall back and fail to hold that rising 20-day moving average, which is getting ready to cross. Uh-oh, that's not what I wanted. All right, it's not going to let me do it here. Anyway, right there, I'll get rid of that box later. But the rising 20-day moving average has been holding on these pullbacks, which I find bullish. And if we can get back up, you almost can see a little bit maybe of a bottoming head and shoulder, left shoulder, neckline, head, right side of the neckline, and then the pullback to the 20 and a breakout above 44.50, I think would be bullish.
All right. Next one for our friends in Canada, and I know people are looking in the energy space anyway. PEY.TO. It is oil and gas producers.
All right. Well, first of all, again, you're in at least in a sector which is beginning to show some strength, which I like. We have seen that positive crossover. So let me just highlight that, because I think anytime you get this little crossover, the golden cross where the 20 goes above the 50, I think that's nice. And you can see recently with the strength, we've been holding on to the rising 20-day moving average, which was completely different than when we climbed above it before. You could see back at the latter 2017, early 2018, we broke, failed right away. Here we break out above, fail right away. Here we break out though, and we have been holding it. And you can see the 20 has come up from underneath. So I think with the PPO looking the way it is, I think we finally have gotten to a point where we're starting to look more bullish here. I would simply maybe take a look at this area right in here. This was a prior low. Here's a reaction high. So I'm going to say $11.60 to $12, and we're right in that range right now. I think the next move through $12, if you get high volume with it, would be very bullish.
All right. The next one I have is Momo. Momo Inc. Momo is the symbol, of course, software.
Yeah, it had some pretty serious Momo. I do like that long tail coming back to fill the gap. So I think the two key areas of support so far have been holding for the most part. There's your gap support, and there was that kind of reaction low off of the gap up on heavy volume. So I'm still looking at 34 to say 35 and a half being major support. We're trading at the upper end of that right now. I like the stock. I think it's consolidating after becoming overbought. You see the RSI had moved up to about 70. So I think we're just consolidating. Given how much the market's fallen, I think this one's held up pretty well. I'd be bullish here.
All right. And let's see, I think it was our only materials sector request, Albemarle. ALB.
All right, ALB. And, well, we coming back up with some increasing volume. We keep failing at the 20-day. We do have a PPO that's starting to move. I mean, I have mixed signals here. If you go back down below, say 87, I think you have to be really careful because the PPO is turned much higher. So I think as long as we can hold on to that recent candle body low right there, I think we're okay. But we did fail. That was a pretty ugly failure at the 20-day moving average right here with that long tail above it and then coming back down and closing. We're kind of hovering beneath it. My guess is this. I think the market goes higher. And as a result, I think it's going to drag this one above. I don't look for this to be an outperforming stock, but I do think we can make a move to perhaps reset the PPO at the center line and to get up to that 50-day moving average. So if I had to, be on one side or the other, I'd be long, but I wouldn't look for significant outperformance here.
All right, let's see, number 9, XPO Logistics. XPO, it's an industrial in transportation services.
Yeah, this one's been performing well. I'm going to go ahead and use the relative chart on this one. But you can see very, very strong move to the upside, and it's in transportation services. Look what transportation services has been doing the last 2.5 months. And yet this stock recently broke out to a new high and is strengthening again today. So you've definitely got a clear leader amongst its peers. You've got a great performer relative to the S&P 500. And if we can get a relative breakout above the recent highs on transportation services relative to the S&P, I think that would bode really well for the stock. So there's a lot to like here with XPO, and there'll be a lot more to like if we start seeing some strength in the overall group. So I think for now, what I would do is perhaps just draw like a resistance line, maybe from here coming down. It looks like maybe we're trying to break out currently on the transportation group back to the upside. But I would say even look further for maybe a relative breakout, or excuse me, an absolute breakout above about 285 or 286 right here. And then I think that the uptrend that we've been witnessing here for some time on XPO would likely continue. I mean, that is a very, very nice looking chart.
Yes. All right, one I don't think we've ever done, Match Group, MTCH. It is a cyclical special consumer services.
All right, actually, I'm just
Is
going to
this Match.com?
Yes, it is.
Ah, okay.
Okay, well, we did get a nice reversal off the 50-day moving average, and that's important because we had a negative divergence in play. So if you mark here, you can see that the highs on the PPO were clearly much lower, and the price highs were clearly much higher. So what I look for, notice that when the PPO is going up, you can see the pullback holds the rising 20. But when we move up and the PPO is lower, then we fail to hold the 20 and we go all the way back down to the 50. I think we have resolved some momentum issues on the stock because what I look for is a 50-period test and a center line test on the PPO. We nearly got that, but we did get the 50 test. I think we're consolidating, but I would expect the next move to be higher on Match.
All right. That is the completion of the 10 and 10. So there you go. The symbols should be showing up here. Yep. I will have these up in the Market Watchers Live chart list. If you recall from the beginning of the program, all you have to do is go to the Market Watchers Live blog. You will find the link to our live chart list at the top of the main blogs page, or as I showed you earlier, it is also in the top and bottom of every Market Watchers Live blog. You should be able to find those links in all of the Market Watchers Live blog entries. And with that, I'm going to go ahead and move us into our ChartCon / market update. All righty, here we go. And I'm actually going to go back here one. So if you go to, and I think we're flashing it on the screen here, stockcharts.com/chartcon. This is where you'll get all of the information about our upcoming conference in August. It is a unique one. In 2016, we did it for the first time as an online conference. It was hugely successful and everybody loved it, as did the all of us who were presenting. And so we're doing it again online in 2018, so in August. And you can register and get early bird pricing so that you can attend ChartCon online. And the agenda is here. So you'll get to see how much we're covering here on reducing risk. And all of these, if you've been watching Stock Charts TV, you are getting snippets from our 2016 conference. And so you can kind of see how it works. But as far as 2018 hitting Stock Charts TV, I don't think it will be. Well, certainly not anytime soon. But if you do attend, you will get to keep all of the recordings and be able to go back and look at them. But an excellent agenda. We have amazing, amazing presenters here. I mean, John Murphy, Greg Morris, Martin Pring, Julius. And that's the second day. The first day, we have Tom McClellan, Dr. Elder, who I adore. I recommend his books to everybody. And it's just going to be a great time. And so go on up here and you can register. And again, $199, that is our early bird pricing right now. If you do want to join us in person, I believe you can still do that at the very bottom of this page. You can learn more about actually coming to the conference. And I do believe we're still selling a few seats. But then you get to join us in person, and we're going to be around in the lobbies. We're going to be, where you can sit down and talk to us one-on-one or in a group. It's just so much fun. We really enjoyed our interaction with our VIPs at the last conference in 2016. And with that, I'm going to go ahead and get us started into our final market update. And here we go. I adjusted the candle glance that you can get to from the member homepage so that I can add the TSX, and then I added TLT in here after the treasury yields. I think it's pretty interesting. I follow TLT very closely, so I wanted to add that into the candle glance when I went through it. These are 2-day glances, so you can see exactly what's going on today in after the price action from the day before, so we get a really good look. As you can see, all of the major markets are higher. When I actually set up this page, we had formed that double top on these intraday charts, but clearly not a problem. We've bounced off of that support from that first pullback, and we are heading higher, hitting new intraday highs as we speak. It looks like we pulled back a little on a few, but Dow, S&P, NASDAQ, Russell 2000, all starting to break out to intraday highs, looking pretty good here. TSX, very choppy trading today, as we can see, but it is also near its intraday highs right now. The treasury yields are higher today, reading 28.32 currently, pulling back slightly. And then we have TLT gap down and continuing to move down. I'm going to want to look at that daily chart, I think, today in my Decision Point blog. I want to see if we've broken down below the rising bottoms trend line that I've been following. And with this drop, we can see UUP has gapped up and is pulling back. And we have commodities lower on the day with a gap down. Looks like DBC is managing to find some support here right around 1725. USO was down this morning, but has managed to get back up at least toward yesterday's close. Right now it's unchanged at 1345. Gold has gapped down, but is now consolidating sideways. And the VIX, similar. We're getting readings right now at about 18.75, and that's pretty low compared to what we have had in the past. So we're seeing volatility pulling back, investors feeling a little bit more comfortable with the last 2 days of a rally. And with that, I'm going to pass it back to you real quick, Tom, if you wanted to add to our market update, and I will get my stocks ready for the anatomy of a trade.
Okay, sounds good. Yeah, I just wanted to again take a look at the dollar chart because we have been sideways consolidating here for a while, and just about every chart that I look at continues to point me toward believing that the dollar is going to go higher. We just went through 3 or 4 days where we had pulled back after testing a pretty key area of resistance up at about 23.75 on the UUP. We are a little bit higher today. But when I look at the 10-year Treasury yield, which was having a really nice day just a bit ago, yeah, you can see still up near the high at 2.83%. Still, it's up 4 basis points. And if we were to break back up above the 50-day moving average, that would clear the early April high. So that would move us to the highest level we've seen in April. And I think on pace, perhaps, to make another run at the 290, 295 area that we saw in February and March. And all of that coinciding with big earnings reports from banks coming out tomorrow, to me, sets up the market to go higher. And I think the dollar is going to go up with it. But, we'll see. Now, to get into the, I want to go ahead and get started with the anatomy of a trade. I have, right now, I own actually 14 stocks. I've got 8 technology stocks, 4 industrials, and 2 consumer discretionary. That's all I have. I mean, I'm mostly in, of course, a lot of the financial companies that I would be interested in. I'm kind of holding off until I see these earnings reports coming up. And one of the consumer discretionary stocks I own is Netflix. That one will be gone in the next day or two because I will not hold into their earnings on Monday night. But let me go through some of these charts and some of these companies that I've traded recently, and I'll kind of walk you through what I was looking at. First is Boeing. Boeing is actually coming up against some pretty good resistance around 340, and I'm kind of deciding whether or not I want to just take profit or continue to let it go. My thought here maybe is that now that we're getting back up above the 20-day moving average for the 3rd time in the last 6 days, and we've got an improving PPO, I may use the most recent low around 325 as a stop. I'm thinking about raising my stop. The reason I got in was back here on this hammer. I had talked about, I think when Boeing was falling back in the 340s and 330s, that really the key support was going to be back around 310 or maybe 315, 320. And you can see on an intraday basis, we went below. I always like to see stocks go below prior support and come back up and rally. Many times that signals a pretty significant bottom. And so when I got in, that was my initial stop. Would have been a move back below 311 or 312. We did have one scary day. I think that was when the tariffs, some of the announcements of the tariffs had come out, and Boeing had a big gap down, but immediately was bought. Look at the heavy volume on this move to the upside. So even though we finished down that day, I look at that candle as being very bullish. There was a lot of buying that resulted in that hollow candle. So I think Boeing, I'm of the opinion that it's continuing in an uptrend, and I think there's a real shot that it's going to get back up to the 365, 370 area. So I'm probably going to give this one a little bit of room. I'm not going to give it all the way back down to the 311, but I would either give it the 325 or maybe even this 320 area on a intraday basis. But I'm looking for ultimately a breakout above 340, and I think that could lead to a retest of what we saw back in late February. So Boeing is still a current trade of mine. Snap, I've been in this a couple of different times. Actually, I think I've traded it 3 times, twice for loss. But the most recent entry was on the gap below gap support, and then the move back up above, reclaiming that area of support. We have not had a close below gap support, which I think is really important. Now, I don't like today's candle so far on Snap. What I really want to see is a breakout above the 20-day moving average. I think Snap has a really good chance to make a move into earnings. Their earnings will probably be coming out in early May based on when they came out here in February. I haven't seen the earnings date. But if we can break through the 20-day, I think Snap has a really good chance to make a pre-earnings run. So I'm still holding this one at this point. Splunk, SPLK. This has been a great performer so far. This one came all the way back down here as well. Actually, I think I got in late March on the first move down to basically take out this prior low after gapping up. It got down very close to gap support, and I've just been holding it. A move back up to about 110, that would be my target. So I'm still waiting on Splunk to see if we can get there. But you can see the volume has started to pick back up again as we've cleared the 20-day moving average, and it is having another nice day today. Netflix, I talked about this one, I think, recently. It's continuing to move higher. It had its target raised yesterday at Cowen and Company from 275 to 325. But they do report earnings on Monday after the close. And if you recall, when I went over reasons to sell from a short-term trading perspective, one of those reasons is earnings reports. I don't hold through earnings. So I will be selling Netflix over the next day or two. for sure. But this one had come back down, and also I think it might have been on a weekly chart. I'm trying to think why. Well, I knew it was getting close to the 20-day moving average. We didn't actually get a test there. Wondering if maybe on the 6th, I bought a couple of stocks had positive divergences on the 60-minute chart. That's what it was. As it was coming down here, look at the 60-minute divergence turn up with lower prices. And then finally, with that final gap down, you can see immediately the buy-in came in, and we've now been in an uptrend ever since. Currently, we still have a 60-minute positive divergence. Still looks good on Netflix. So I'm going to hold. If we get back up over 320, though, 320, low 320s, that would probably be enough. And that's assuming, again, over the next couple of days that it would get there. But I'll be out Monday mid-afternoon at the latest, even if it doesn't reach my target. And then the last one I have is Twitter. Actually, don't want the hourly here. Twitter, again, I just talked about this one, the 10 and 10, but that was a nice reversing candle right here. I'd been waiting for gap support to be tested on Twitter, and thankfully, Facebook gave many of these internet stocks the reason to move lower. There was a lot of selling in sympathy with Facebook. I think there are a lot of stocks in the internet space that look better than Facebook, and I think Twitter is one of them. I would look for a breakout first above the 20-day, and then this is another stock I think that could run into earnings coming up next month. So that's what I had for Anatomy of Trade. What do you have?
All right. Well, unlike you, I don't trade nearly as often. So most of my trades are still in motion in a intermediate to longer term time frame. Let's see, come over here. So what I thought I might do is I ran my PMO scan this morning. I only came up with these 5, and I'm going to look at them cold for you. The reason why is what I want to do is show you these came up in my scan. If I were to be going ahead and buying them, I want to show you why I would where I'd set my stops and why, and where my targets would be. And again, this is cold, so I'm going to just start on some of these annotations. I may not get through all 5 of these, so we'll just kind of go as we can along the way. So as you can see, my scans are going to show you that we've had PMO rising for about 3 days, and that's what I like to see. I also have my scan set to have a decent scooter, because remember we talked about scooters earlier. This tells us the internal strength in the intermediate and long term, but it also gives you relative strength based on the actual value as well amongst its other peers in that group in the large caps. So I'm looking at this right now. Actually, I think this looks like a pretty darn good chart because we have a flag formation here. And in a very short term, you can see we did break out above that declining tops trend line. So I'm going to pull it into annotate. And where might I set my stop? Well, what I usually do, and I know, Tom, from what I've been watching you do as well. I don't know why this is a little bit blurry. I apologize. I would go and look at where the last area of serious support was. And I can decide to tighten or loosen depending on what my target is. I'd like to pick a stop that is not going to get necessarily triggered right away, but I don't want to set myself up with a serious move down before I even can get to my target, because risk reward wise that doesn't make sense. So in this case, I'm just looking at where the most recent support levels were. So I have the breakout from this trading range up here, and I also have the support level for that trading range. We also have the 20-day EMA as possible support, as a possible place to set a stop. So when I'm looking at this, I think I've got an upside target probably around here, 77, 75, somewhere in there, 78. Right now we're sitting at about 72. I would probably set my stop if I'm going for a longer term trade. I might set it all the way down here because I'm willing to write it down quite a ways, because I know I'm going to be holding it a while. And if in my mind I think the stock market is going to do well, or this particular sector is going to do well, I'm willing to set up a really, a stop that might not connect for a very long time and might require quite a bit of a drawdown. But if it's going to be an intermediate term to longer term trade, it's a buy and hold. I'm pretty much not going to do much with it unless the market as a whole gets me scared or concerned, I should say. And then I might turn off a lot of trades. I did turn off a lot of trades, not my long-term ones or my intermediate term, the longer intermediate term, the ones that I'm holding on in terms of months rather than years. I kept those going because my intermediate term indicators have still looked pretty good. Short term, I'm not trading in the short term right now because I haven't been very comfortable. So just a little bit of background here. So what I would probably do, I'm looking at this one, I would probably set my stop right around that 67.50 area, because that would bring me below that 20-day by quite a bit, but not get me too far below what we had at the top of this previous trading range. And again, my target, I'd be looking for, I'd have a minimum upside target. I'd want about $78, somewhere in there. So that would be one. And again, like I said, I'm just pulling these up. I wanted to do it on the fly, mainly because I did want you to kind of hear how I'm thinking out loud. And okay, so here I'm looking at a trading range possible buy here. So let me set up the trading range itself. And there are different ways to set it up, but I'm going to say $27. That seems like a pretty clear support and resistance level from earlier. And where's the top of our trading range? Somewhere right around here at about $31. So honestly, looking at this, I probably wouldn't get in. It's at the top of this trading range. I'd actually expect it to probably come down and at least test. Let's get this trend line here. There we go. I'd be looking for at least a test of this rising bottoms trend line before I would even consider getting into this. I would honestly really want to wait until it got possibly even a little bit lower than that. If it dropped below and it just doesn't look good and the PMO's turning down and hitting negative territory, forget it. So let's just say I was going to get in. This is something that I really liked. I would probably set that stop down by that 50-day EMA. It also coincides with this rising bottoms trend line. So that would be my tighter stop right here. And I probably would set a tighter stop here because I do kind of expect it to go down before it goes back up and breaks out. So that would have been my thought process on that one. How we're doing on time here, a few more. Materion Corp. I'm going to put the full quote on just so we can see what we're looking at as far as industry groups. There we go. So this gives me all of that information that I want to see as far as the PE and the sector and industry group, because that gives me an idea of whether it's something I want or not. So let's go ahead into annotate here. And again, I want to find my support and resistance levels. This one is, I'd be down all the way here to about 45 would be, I think, the really longer term support levels. That's a long way down. I wouldn't be setting a stop down there, but that's something I would expect if we start seeing a big problem here for the industrials, or in particular the machinery area. So I'm adding another one here in a little closer range because that matches these more intermediate to shorter term lows. And my upside, so yeah, this wouldn't be worth it to me because the upside target, even if I'm going for that intraday high we had back there, it's not interesting to me because I think my risk reward here would just not make it really worthwhile. But if I were to come in, and because I am thinking that we might have a pullback here, if I wanted to set a smaller or a closer stop, again, come into that thumbnail, look at where the 50-day EMA is. Does this match up with any support or resistance? I think that's an interesting level right there. And we're now testing that support. So I would probably be watching, and again, set a stop probably tightly at this point. I would probably be right around that 50-day EMA, only because, I'm not so, again, I probably wouldn't jump into this just because I don't think the risk reward is really there. But that is how I would consider, my stops and targets. Let's see, one more here, no, two more. Let's try this one. All right, this one has a really nice breakout, and we've got the PMO buy signal set up here. We don't have an upside target that I can see here, so I'm going to go to the weekly chart just so I can get an idea of how that top is. Okay, great. This is great because I can really see some possible targets here. Let's go ahead. I'm going to annotate this one because this is one that might be a good intermediate to longer term trade. So obviously this is the more recent overhead target area, about $14, where we topped out at the end of 2016. Been a really rough ride, obviously. Probably not the best relative performer, I would say, in this group, but at this point, if it came in on my scan, looking at the daily chart, it looks pretty good here. So I'm looking right here at there's actually a decent possibility we'll get up to the $14 range, and we're sitting at about 12 right now. So I think that's quite interesting. I'm going to go back to the daily chart and look where I might set some stops. And then we will close out this program. So again, very nice. So I'm going to go into my annotation tool very quickly, get my support and resistance. Pretty obvious level here, I think, that you could see. This is that more recent top, and we're getting that move above there. So I think that looks pretty good. So where would I set a stop here? I'm looking at this level down here. I would say that 1150 for a tight stop, just because that matches up pretty much with that support level we saw back in mid-March for that trading zone. The 50-day EMA, about $11.30 would be another possibility if I wanted to make it a little bit lower, because I can see right there, that's about where that 20-day EMA is. And it's also where we had some lows earlier when we consolidated somewhat here. So I think that could be a possible stop. And again, I've got a really high target right now. I mean, that $14 level looks doable. It really looked doable. So, and we've got the breakout. So this would be, I think this one, it would be one you'd get in kind of right away. I might actually consider this one after the program. And look at this level here. From that top, that intraday top, and it matches the top of this little trading zone. And we managed to pop up above it, and we're holding higher from there. So I would probably be looking, I've got a $14 target. I would be willing to set my stop maybe even all the way back to that, like I said, 1150 or 1130 range. And so that is my anatomy of a trade. And I know we're getting close to the end here. So here's what we covered. And I will pass it back to you. We got a lot of great comments today about the show, Tom. If you guys could go into the survey, click there underneath the player and let us know what you specifically liked about today's program. That would be very helpful.
Awesome. Yeah, we are getting close to the end here. I do want to say, the market has struggled at the end of the day to hold up like above key moving averages. And I have seen the Dow drop about 100 points here in the last 15 or 20 minutes. So it'll be interesting to see whether or not we can hold on at the end of the day. That's going to be important. And Aaron, I know you got a big workshop coming up tomorrow.
Yes, I can't believe it's already tomorrow. Gosh, I've got some work to do tonight. Yes, on divergences and confirmations, we have everything stock charts coming up Tuesday of next week. Tim Ord from the Ord Oracle will be here Wednesday. Should be a great show.
Absolutely. I want to thank everybody for joining us today. Please remember to complete the survey as you exit. As Aaron was mentioning, it's just below the chat room. You can just click on that link, how do we do, and it takes you to a very brief survey. We do go through and read all the comments. It's helped us get some nice segments for future shows. It gives us opportunities to answer some questions from time to time on the shows. But we do use that information, and it is very valuable to us. So please complete the survey. And we just like to get general feedback on what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great afternoon, everybody. We'll see you back here tomorrow. Good luck to the Ducks and the Caps.
Yeah.
Everybody.